La 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 la.
Hit that note. This is part 5. Welcome back to part 5 of our limited series podcast on finding peace of mind when it comes to sales tax. And we hope that people are finding some peace of mind as they learn about some of these concepts and as we talk about these different spokes. We're on spoke number 5. I've learned that I have nexus. I've learned that my products and goods are taxable in some or all states. I've determined how I might be able to manage the taxability and the rates in my own system or in an automated system. And then I've learned that I must collect tax if I have those responsibilities on taxable goods at all costs, unless someone indicates that they're exempt by providing an exemption certificate.
They got the certificate to you.
Completed fully, right?
Good job.
Now, once you've complied with all of that, you understand your responsibility and you've complied with all of that. Maybe you registered in multiple states, multiple jurisdictions. Maybe you went through some voluntary disclosure programs to try to bring everything up to date. And now you're fully compliant. You're collecting tax. You believe you're collecting it on taxable items and on the proper rates. You're collecting certificates where tax may not be due because your customer is exempt. Now I got to get it to the state. And this is an interesting relationship and situation, right? I've got to make sure that I accurately and timely remit these taxes to the jurisdictions that I collected them on behalf of.
That's
right?
True.
So let's just talk a little bit about the importance of returns and why this is such a significant spoke in this wheel, right? We left off with 4 spokes. We've got a slightly more sturdy wheel, but we need to have a process in place when it comes to returns. So just tell me a little bit about some of the pitfalls or some of the situations you see when it comes to regular return filing.
Yeah, when it comes to return filing, you got to have a good system and process in place. You really got to have everything in order because it can quickly get out of hand as you register in more states. You start filing different types of returns. We're talking about sales tax, we're talking about use tax, we're talking about consumers use. What is it that we're talking about and what we're remitting to the state?
So let me interrupt you there.
Sure.
So one of the common themes that we're finding when it comes to sales tax, which is imposed on a state-by-state basis, is my nexus rules might be different from one state to the next, right?
Yep.
The taxability of my goods and services might be different from one state to the next.
Likely is.
The certificate form that I need to have on hand could be different from state to state.
Likely is as well.
And so I guess it proves out that states have different tax types from one another. You mentioned earlier
This is true.
Hawaii, New Mexico are more of a gross receipts tax, but it functions like a sales tax.
Yeah.
Washington calls it an excise tax. They also have a business and occupation tax.
Arizona calls it the transaction privilege tax.
So there's different tax types. In general terms, they're imposed or applied similarly, but there are some nuances, right?
Yeah.
So it goes to show that the return forms, the due dates, the filing frequencies, and the type of tax that's remitted on those forms is probably different from state to state.
Yes, 100%. That's why I say it's important that you get a good system in place. You get a good understanding. Start with the tax calendar.
So key number 1, tax calendar.
Yeah.
What does the tax calendar tell me?
I call it a tax calendar just because it identifies at what point in the month you're required to file what tax. By default, most states I would say have a due date of the 20th calendar day of the month. Of course, when it falls on a weekend, then it either goes before or after, depending on the state and how they do that. And then if you are gonna, like in Texas, for example, you're gonna pay Texas electronically, you got to do that 2 banking or 1 banking day prior to the 20th to allow for that transfer, unless you're going to initiate a same-day wire transfer.
Okay.
I mean, there's always these little nuances depending on the state, but starting with a good tax calendar to identify what state, what return, and its due date.
So my tax calendar tells me the state, the return that's due, the due date of that return. Does it also need to include the payment date? Can the payment date be different than the return due date?
The payment date could be different. It just depends on the state. But more times than not, we're submitting payments at the sales tax people 2 banking days prior to the 20th to ensure that the funds get there on time.
But most payments are now done electronically.
Yeah.
So my due date is the 20th. If I'm making a payment electronically, I probably need to make that payment sooner than the 20th. If I make it on the 20th, it's possible that the state could deem that it's late.
Correct. States like Florida and Texas come to mind just because they require the payment to be made on the day before so that it posts on the 20th.
Gotcha.
Other states, they'll allow you to make the payment on the 20th, even though the state's not going to get it till the 21st or the 22nd, depending on how it falls, and just as long as you have a payment confirmation on that day.
Gotcha. So something that might add some complexity to the tax calendar is the fact that states also have different filing, what we call filing frequencies, based on different conditions and parameters that the state determines, right?
Yeah.
So, I mean, at worst, I believe I'm going to have to file a sales tax return on a monthly basis.
Or it could be even worse. You could have to make a prepayment of the tax due. And in Illinois, for example, that prepayment is due every week. You got to make 4 prepayments sometimes in Illinois.
Wow.
And it gets real messy. Or you can be in New York and be subject to the New York prompt tax, which bang your head against the wall right now because it's painful, because it's due the 1st to the 23rd and then the 24th through the end of the month. And you got to, it gets messy.
It's messy.
A proper tax calendar that shows when the return is due, the frequency in which it's due,
what return it is,
and when to file it. And that's just crucial if you're going to be managing that internally.
And then there's other frequencies, right? Monthly or prepayments.
Yeah.
But you might also be set up on a quarterly filing or
Annual.
a semi-annual or an annual filing.
Or occasional. We get into occasional. I didn't collect any tax that month, and the jurisdiction may allow you not to file a return only in the period in which you collected tax. Yeah,
so you could legitimately on a given month just be confused whether you should file or not, right? I have an occasional filing frequency. Sometimes the occasional filing frequency, it doesn't always relate to any tax collected. Maybe once you get up to a certain amount of tax collected, they're like, yeah, go ahead and burden us with the administration of processing your return.
Yeah.
We don't want to be burdened too much by your return filing.
Sometimes taxpayers get confused because they didn't collect any tax. They oftentimes think that they don't need to remit a return or file a return at all. Hey, I don't even owe you any money, so I'm not going to file a return. Well, that's problematic because then you will oftentimes in some states will get imposed a late file penalty. Hey, you filed your return late, even though it was a $0 return, $0 due, you filed it late. Here's $51 or $50 or $100, depending on the state.
Okay, so that brings me to point number 2, right? So point number 1 for me is a solid tax calendar.
Yeah.
To understand the type of tax, the form that you need to file, the state that you're filing those in, and the frequency of when those need to be filed with the due dates, right?
Yeah.
To me, key number 2 is the most important aspect of a return is that it's accurate, right?
For sure.
So we've collected these taxes, we've collected them based on certain tax codes. Here's a form that we have to move these numbers over to so that they come across on the form properly. They address to the state what's happening, what the amounts are for, and it totals out to the amount I collected.
That's correct. In some states like Indiana or Michigan, it could be pretty simple and straightforward because it's a flat rate. It's just one form, one pager. But then you get into states like Missouri and Arizona, and you get into Alabama and Louisiana. Some of these states where you got to report all the local taxes. Some of the local taxes will be due on this schedule. The other local tax, the district tax, maybe the special transit taxes, they'll be due on this schedule. And much like your income tax return, as much as I hate income tax and don't want to touch income tax, everything's got to tie back. Everything's got to balance.
Yeah.
All the sales, your taxable sales, okay, here's my total taxable sales and here's the jurisdictions in which they occurred, and then making certain that you report that correctly.
Gotcha. And we've already talked about it a little bit, but the third one really is they need to be timely.
Yeah, timely.
Right? They need to be filed on time, and that might mean that you need to understand that there's some timing on processing the return.
Correct.
And also processing the payment.
Correct.
Right. So, and you have both the return and the remittance of the money.
Yeah.
And those don't have to be done at the same time.
No.
It's often efficient or convenient if they're done at the same time, but your process for compliance and filing the returns and posting the remittances might be a little bit different, but you'll build that according to the processes that you have in place, right? You might have to file the returns, and then you might have to go get approvals for amounts that are going to be paid, and the payments might have to be separated from that. So
correct.
That's critical. One caution that I want to put out there, and you might be able to speak to, is, you spoke about the occasional filing frequency, but that's pretty rare.
Yeah.
And oftentimes it's going to be a local jurisdiction that might allow for that.
Not.
But you might say, hey, I had no sales transactions, or I didn't collect any tax this month, so I don't need to file a return. Is that the case? I have $0 due. Do I need to file a return?
Unfortunately, you still have to file that return. And if you don't file that return, even reporting $0 in tax, some states will impose a late file penalty. So they'll charge you a fee because you didn't file that return.
So you file based on the filing frequency and the due date, regardless of the amount of money that's on the return.
Regardless if you make sales, collect tax, don't make sales, don't collect tax, you still have the obligation as a registered taxpayer. You're the agent of the state. So the state is requiring you to notify them, hey, what happened last month? Hey, what happened last quarter?
Yeah.
And if they don't get a return that indicates you made 0 sales or you made 1 million sales, they still want to know what happened in your business.
Yeah, 100%. So returns and remittances are critical. Having a system or a process is absolutely critical. I would just mention here that from our perspective, what we typically see people do, they may have an in-house process. They may file the returns in-house with in-house personnel. That might be outsourced to kind of a managed solution through a technology platform. And then it may be outsourced to an outfit like us who manage the full turnkey process.
Yeah, at the sales tax people, that's our flagship service, the sales tax return preparation and filing. You want to make certain that it's done right, it's done accurately, it's done on time. Otherwise, it's an easy way for the state to find errors or issues in returns you're filing and realize, they don't seem to know what the heck they're doing. So I'm going to come over and I'm going to audit and make sure that they're collecting the right amount.
Yeah.
And they're remitting it correctly. So you want to decrease the amount of errors or issues. It just helps overall in staying in compliance.
It's a critical spoke in the wheel, and I think without a process in place that you feel confident in, your compliance wheel is a little bit weaker, and as you navigate some rockier roads, it's going to get unsteady when it comes to that. So if you have some questions about return processes and how to set those up and some great tips on that, then get the guide, right?
Get the guide
to sales tax peace of mind.
It's going to provide you peace of mind and provide a little bit more clarity, maybe answer a different question maybe we didn't go over as detailed.
100%. Well, Paul, thank you so much. Paul and I built, if you can believe this, these two random guys built the sales tax return process at the Sales Tax People. And we've seen a lot over the last 2 decades. And we definitely have some tips to overcome some pitfalls that you might run into. And so it was great to talk to you a little bit about returns and what we love to do on a daily basis. So thanks for your time today.
Absolutely. Love returns. Love filing returns. So grateful to chat about it.